Good morning. Welcome to the XM.com weekly market update. And we're joined again by Pete McGuire, the CEO of XM. Good morning, Pete.
Good morning, Andrew.
Big day, the RBA meeting.
Yes, absolutely. A couple of hours away.
Yep, interest rates you would think will go up again. So if we look at the CPI numbers that came out last week, 6.8%, which is a jump which the RBA nor the government would have liked.
No, that's right. I mean, it was a big push to the upside from March 23, 6.3, and everyone was tipping maybe you're going to hit a 5 handle, 5.8, 5.9, and you've got a 6.8. So, yeah, I'm not going to even go out on a limb, but I will say this 45% probability that you're going to see a rate rise today. So let's wait and see what happens.
Well, you would think so. You just can't have your official cash rate around that 3.8 mark, inflation at 6.8. So you've got negative 3% real interest rates.
Yes.
It's just doesn't work like that.
No, it doesn't work.
So clearly they've got to get interest rates higher, which is going to create a lot more pain, particularly for mortgage holders.
Yes, exactly right.
Over to China, the PMI numbers came out last week. Now, once again, in contractory territory there. So, coming out of lockdown, there was that big anticipation of a huge amount of stimulus, etc., and it hasn't eventuated yet.
No, well, you put your mind back to the end of February and it was quite strong and everyone was saying we're going to see a nice move to the upside for China, the stock market, everything moods, positive sentiment, and it just hasn't delivered at all.
No. So that's struggling, which sort of plays into this chart as well. Obviously, if China does a lot of stimulus, they will need iron ore, which is great for the iron ore price. In turn, it would be good for the Aussie dollar. But as we can see on the chart there, iron ore is around that 105 mark. A few months ago it was at 140 or 135.
It's a big discount, isn't it?
It certainly is. So, and that obviously plays into the Aussie dollar in a huge way.
100%. We've been flatlining and we've spoken about that for a long time. It's just been a no-show, the Aussie, for the best part of 3 or 4 months. Little moves, but nothing tremendous like you've seen in the yen or the pound or certainly the euro.
Yeah, it certainly translate to a commodity-based currency, isn't it? Certainly is.
Yes, absolutely.
US non-farm payrolls hit it out of the park. So
Friday night it was like boom, and it really washed across the US equities. We had the Dow up over 2%. We expecting 190,000. Never go out there and if an analyst ever asks you or someone phones you and said from Bloomberg, oh, what do you think the NFP is going to be? I just say no comment. 190,000 was estimate. Hit 339,000. That's 13 months in a row that it's beaten expectation.
Resilient labour markets, to say the least. So, US dollar, once again, not a huge amount of movement there, but it has crept up in the last couple of months, sitting around that 104 mark at the moment.
Yeah. We've had a nice, and that's been demonstrated by a weakness as far as euro. The yen's back at around that 140 handle. So, yeah, it's the US dollar with FOMC meeting. Fed Chair Powell, they're saying, is relatively dovish on any rate rises this month, but hey, it's you're still 10 days out or 8 days out, so we'll just see if their mood changes. Certainly July would have been a lift off as far as rates increasing in the States, but they might do one in June as well.
Yeah, well, it's looking like they will do at least one more, so time will tell. Oil prices, now the Brent and the WTI, it's ticked up a bit overnight, but they're still around that sort of $70, $75 range. And I know, like with the OPEC meeting, you normally attend those as well.
Yes,
so
I do
one
in Vienna.
just recently. So.
Yeah, over the weekend, it was Saturday, Sunday. When you're thinking about that, the winners were the UAE, the Emiratis. They got an extra 200,000 barrels in production uplift. Saudis have said to themselves and to OPEC Plus that they'll like to see 1 million barrel, they'll cut by a voluntary cut of 1 million. There's been no change to a lot of Africa, and there hasn't been a lot of change to Russia. So when you're looking at the big picture, the Saudis are saying we want to see higher prices. Their minister came out last week, the oil minister, who was a half-brother of Mohammed bin Salman, the Saudi prince who is the head of the kingdom, and there is no doubt that he wants to really have an impact to the guys that are going short on the futures market. He said that speculators are going to get crushed. So let's see where energy prices go. It seems to be a little bit of the paper market versus the physical market, but if you're holding the actual commodity, you might end up getting on top of the short squeeze.
Yeah, so it'll be an interesting time, but it certainly hasn't probably shot up the way we thought it would have.
No, well, it had a 4.5% move to the upside this time yesterday, but it's given some of those gains back. But I've just got to see how it rolls in June and July, because you've traditionally got more increased consumption from summer driving season. You've also got the other side as far as the hurricane season coming in from a seasonality play that can disrupt production in the States. So, and geopolitical concerns normally rise in the Northern Hemisphere summer. Tempest fray.
Yeah, it'll be interesting to see how it plays out.
Yeah.
We spoke last week about the big tech stocks and AI. It's obviously the flavour of the month. That just gives you an indication year to date of some of the returns, which are outstanding.
Yes.
Ironically, the largest one there, which is C3AI, is the only one of those companies that doesn't make any money. They have revenue, of course, but they are a loss-making company, yet they've had the biggest return.
Well, I've been in a couple of business schools, and the professors keep on saying that it doesn't last forever if you don't make money.
No.
That was always the forward-looking metric. Is it profitable?
Yeah, earnings.
Earnings.
It's all about earnings, Pete.
Yes.
So I know, and you can, if you've got the heart for it to go into those ones which are more speculative.
Yeah, you can get crushed.
You can get crushed. It's timing the market is a very difficult game.
Yes.
So it'll be interesting. But those other ones, the Microsofts, Metas, Alphabet, Nvidia, incredible.
Yes.
Big returns.
Absolutely.
From big tech companies which make a ton of money.
100%.
Finally, this gives it, once again, playing into the top 10 tech stocks roughly. The EPS of those companies, you can sort of see where that is compared to the other 490 companies in the S&P 500.
No comment.
It's just extraordinary.
Did you say 490 out of 500? Yes, you did.
Which you would sort of think if this equity market continues to improve, there could be some bargains in the bottom 490.
Yeah, you would think so. It makes up a fair slice of the market, Andrew.
Well, there's plenty of good companies in there as well. But once again, you see some of these charts to give you an idea of how powerful those tech stocks have been in the first sort of 5 months of the year.
5 months of the year. I'm curious to see how Janet Yellen raising $600 billion is going to be from a debt side and bond issuance. So to fund the debt ceiling. This is all got to play out over the next couple of months. So, strap yourself in. I think we're going to be in for some fun times.
Yeah, for sure. But anyway, we'll keep an eye on the RBA later today.
Yep.
And we can
look forward to it.
Discuss that next week.
I'll look forward to that as well.
Good stuff. Thanks, Pete.
Take care, Andrew. Thank you.
And that's the xm.com weekly market update.